Hi everyone, I hope you all safe and healthy with your family and friends. In this video, we are going to learn about 11th Standard Accountancy, Chapter 8, the introduction of a bank reconciliation statement. Okay, what is the meaning of bank reconciliation statement? Bank reconciliation is a statement which is prepared to reconcile the causes of the difference between bank balance as per the cash book and the bank balance as per the passbook. Okay, what is the meaning of cash book? The cash book is a book which is prepared by the business to keep the track of the cash and the bank transactions of cash in hand and cash at bank. Okay, how many columns does the cash book has? The cash book has 3 columns, that is discount column, cash column and bank column. But here we are not consider about discount column and cash column. We are going to consider about only the bank column because we are going to prepare about bank reconciliation statement. Okay, so we are going to discuss everything related with the bank. So let's take the cash book. It is prepared by the business to keep the track of the bank and the cash transaction. And what is passbook? What is the meaning of passbook? Passbook means it is a statement. It is a bank statement. It is prepared by the bank to keep the track of the consumer transaction, right? So what we are going to know about? What we are going to know about it to find the difference between cash book and passbook, or to find the balance between cash book and passbook. So for an example, let's say on December 31st December 2021, in cash book balance says 5 lakh rupees is in the bank account, okay. But on 31st December 2021, the passbook, which means passbook bank balance say 5 lakhs 50,000. So you can see there is a difference between the two of them. Why it's happening? There is a lots of reasons between them. There is a lots of differences between the cash book and the passbook. So it's important to reconcile. It is very important to check those differences. So to reconcile those differences and everything, what we have to do? We need to prepare the bank reconciliation statement. It is very simple. The format of the bank reconciliation statement is, it has the particular column and it has 2 amount column, the inner amount column and the outer amount column. It is very simple format. In there we have to add and subtract it for the given transaction. Listen carefully. Bank statement has assets and liability. Okay. The bank statement has assets and liability concept. It is very important. The rules of the assets and the liability is the most important for the bank reconciliation statement. Now we need to understand that we have to see in the business point of view and the bank point of view. Let's take for an example. First we take the business point of view. It has opened a bank account to run the business and deposited 5 lakh rupees in the bank, into the bank. Okay. What is this 5 lakh rupees for business? Tell me. Yes, this is the asset for the business because business has deposited 5 lakh rupees. So it won't for the business. It has a right to it. So that 5 lakh rupees is the asset for the business. The business will show to its balance sheet and asset side cash at bank 5 lakh rupees, right? Okay. What is the rule for the asset? Regarding asset rule, whenever bank balance increase, we debited it. Whenever asset increases, we debited it, right? Whenever the asset value decreased, we credited it. Whenever bank balance decreased, we credited it, right? It's very simple. Okay, can you tell me what is the 5 lakh rupees for bank? Is it asset for the bank? No, it's not asset for the bank. Why? Why? Because bank just storing that money. Bank just, it's just keeping and safeguarding it. That 5 lakh rupees is not asset for the bank. Okay. So what is the 5 lakh rupees? Because it doesn't own it. That 5 lakh rupees money of the, that 5 lakh rupees money is for the business. Business is what? Business is the customer of the bank, right? Why? Because business needs to open an account with the bank. So business is open an account with bank, isn't it? So business is the customer. So for the business only, the customer deposited that 5 lakh rupees into the bank. So business owned that money. The bank just keeping that money. So for the bank, the money is what? The money is the liability for the bank. It doesn't own it. It just keeping it. Whenever business demand it, like through ATM, Paytm, or demand draft or pay order, anything for what, the bank has to pay back to it to the business. So that 5 lakh rupees is the liability for the bank, because bank has to pay back to it to the business. So that 5 lakh rupees is the liability of the bank. So on business point of view, that 5 lakh rupees as the asset, and the bank point of view, that 5 lakh rupees is the liability to the bank. On the bank point of view, the liability decreases, we debited it, and the bank point of view, the liability increases, we credited it. It's just opposite with the assets, vice versa. Okay, that's all. Then you need to know what is the meaning of debited and what is the meaning of credited. Let's see. First we see the business point of view and also bank point of view. Let's see. From the business point of view, whenever asset increases, we debited. Whenever asset, which means the bank account increases, we debited, and whenever bank account or asset values decreases, we credited. Okay. On the other side, in bank point of view, as the rule of the bank, as the rule of the liability, whenever liability decreases, we debited, and whenever liability increased, we credited it. Okay. Do you have any doubt? Please comment it on the comment box. Thank you. Take care.